books talked about system hopping, but you don't really know that lesson until you blow accounts, do dozens of different trading styles and approaches that don't work. They have no sound logic in the marketplace, why it's doing this and doing that, divergence indicated this, harmonic that. All those things are something that promotes the idea of a religious view on the marketplace and not just time and price. Time and price is not a religion. It's the truth. That's what these markets deliver on. Look at the chart. What's at the bottom of the chart? Time. What's on the vertical axis? Price. Why are you complicating it? You're saying I'm complicating it. Why are you? You're adding triangles and shapes and all these things and moving averages and all this stuff on your chart instead of just looking at what these candlesticks are documenting. Where was it an hour ago? Where was it last Friday? Where's it likely to go today? Where's it likely to go by the end of the week? If you ask those questions every single time you sit in front of the charts, you'll have a pretty good idea of what it's likely to do. Will it happen every single time? No. But by itself, that right there, what I just mentioned to you, that was the first steps for me to stop looking at those books. Those books are going to tell you things that 90% of people that trade lose money on. Let's be honest, folks. Let's just call it like it is, okay? All of those books, all of those teachers, all these YouTube channels, everybody out there is talking about the same things that result in the 90% blowout of live traders. So why are you holding on to that stuff with a death grip? No, it's going to work for me. I did that same thing. And I lost. Blew accounts over and over again. Crying, tears, weeping. Why can't I figure it out? Those things are in a 90% bracket of losing money. If you walk down the road and you see these glasses of water, free to drink, you walk over to it, you pick it up, you sniff it, just doesn't feel right. And you take a step back and you watch other people walk over there, and as soon as they take a drink, you start choking, they drop dead right there. How many people do you need to see pick up that glass, take a drink, and drop dead before you realize it's probably not a good idea for you to have a swig? But unfortunately, marketing is what it is, okay? There's always some clever little way, gimmicks is what they are, of making it seem like there's this new twist on something old, okay? And bad logic, no matter how much lipstick you put on it, is still bad logic. You can't change that. So the idea is for you to find it in the price action. The things you're looking for in the chart or in price action, they must appear clearly in price. And if it's not clear, if it's real muddy and just choppy like this, it's indicating to you that this is not a market. The smart money is going to sit down and say, yeah, this is where we're going to operate today. It's heavily manipulated. It's not being allowed to trade freely. It's held. So if it's being held and manipulated, do you want to be in there? Because if you are doing that, you're gambling. So don't do that. So you have to think algorithmically. How do you pair your orders? If you don't have this mindset going in before you click the enter button of your trade, you are gambling. You have no idea what you're doing. You're trying to guess. You're in there seeing what would happen if I did this. And then when it works, you're telling yourself, well, if I did that with real money, I could quit my job in 3 months. Wrong. And when it's bad, you're thinking, oh, well, I wouldn't have took that trade anyway. I'm really cool and astute. I'm an apt pupil of price action. No, you're a gambler. You're dabbling on a demo account and you're not learning anything. You're conditioning yourself to believe that these sensations that you feel, when it's right, it's skill. And when it's not, well, that was just you just playing around. You weren't really doing anything serious about it. And that creates toxic thinking. And it builds a false sense of security. And in certain instances, some individuals literally go out and say, well, I'm going to put live money in there because, I got lucky a couple times and I could afford a couple $1,000s. I can do this and I can do that if I need that. And that's what everybody does. They fall victim to that. I don't want you doing that. You have to have a real reason why you're doing something, even in demo. Otherwise, you're teaching yourself to think well, improperly about what it is that you're trying to do in these marketplaces. But the main thing is you're looking for an opportunity to anticipate the expansion of that daily candle in one direction or the other, either higher or lower. And in that direction, higher or lower, where is it likely to go? And the easiest thing I teach is old highs and old lows, and relative equal highs and relative equal lows. Those two ways of looking for pools of liquidity are the easiest, most visual representations of targeting there is. It's simple because it's based on sound logic that the algorithm will never be changed because of. Because old highs, right above that, is always going to be buy side liquidity. Buy stops are going to rest above that. And below old lows, there's sell stops resting below that. It's always going to be that way, folks. It always will be that way. Don't send me comments in the videos. Please don't send me emails asking me that question. Do I think by me teaching, is it going to break it? Are they going to change their route? They're not changing anything. They can't change it because that's the way these markets book. That's the way it is, folks. It's the way it is. The sky's blue. Not all the time, but the sky is blue. The grass is green. Not all the time, but the grass is green. You follow what I'm saying? So these are rules we live by. Sometimes there's going to be these outliers, these things that creep in that cause your interpretation of price to be incorrect. And guess what that means? You did something wrong. Does that mean that you're a failed trader? No, it just means you made a mistake. You're human. I'm human. I'm going to make mistakes. I'm going to read it wrong. I'm going to interpret it wrong. I'm going to react too late. I'm going to react too soon. I'm going to anticipate things that are not likely to occur, and then either I have to take the loss or I reverse. These are all things that you're going to have to be met with in time, and you're going to have to see whether or not this is for you. And some of you, in all honesty, this isn't going to be for you. Not my stuff alone, but trading in general, because it's risky. And don't ever think that something magical is going to happen. If you're not consistently profitable in a demo account, and you're not consistently finding setups, executing them, getting in and getting out with confidence, on the lowest of leverage. See folks that are doing videos and are recording themselves actually entering in the trades on the paper trading application on TradingView, which is great. But they're using leverage that everybody knows that they are not really in a position to afford. So I know it feels cool, it feels flashy, and it might feel like you're playing a video game. I don't want you to have that mindset. I want you to think about how you can make this as boring as possible. Because if you make it boring, you won't be a victim of your emotions. It'll be just like you go to work. I'm not saying you love going to your job, but doing those things that you go to work to do yields you what? That paycheck at the end of the week. That's your minimum expectation. You get to work and do what's expected of you. Anything above that, then obviously it's up to your manager to decide whether or not it's warranted to receive anything more than your standard pay. But you need to treat this just like that. It's a business. So when you're doing your executions, don't be influenced by trolls or hecklers in the comment section saying, oh, well, you're doing micro lots, 1 micro lot. It's not about that size of leverage. It's about you finding the consistency of getting in, knowing what you're looking for in terms of managing the risk, in terms of the points or pips, not the money. Money is a derivative of doing the right things. In the beginning, you need to focus on doing the right things. The logic needs to be there, not the reaction emotionally and psychologically to fake demo money. Don't do that. You're actually causing yourself barriers. It really is creating a barrier for you to find success if you do those things. It feels cool. It feels fun. Like, yeah, if I would have been a real trader, I could have made this much money. But you didn't. So let that be the reality. You didn't. So you're really tricking and conditioning yourself improperly, which is the opposite of what I teach my students with backtesting. Whereas I teach my students when they do their backtesting in their annotations, they write in there as if they saw the trade happening beforehand. And by doing that, it's like self-talk. You're speaking to your subconscious, and your subconscious is going to refer back to that as a false memory. Because it's a positive reinforcement, it teaches you, because of pattern recognition and over again being exposed to the same elements, and you're reinforcing yourself with your own comments and your own cheerleading. You're fortifying your expectations going forward on this pattern yielding something in the past, not that it's going to absolutely work in the future all the time,